Okay, so when you think about making, you know, big returns in real estate, especially in South Korea,
Hmm.
where does your mind jump to first?
Probably Seoul, right?
Exactly, Seoul. And usually, like the super affluent Gangnam district, it just kind of feels like that's where the biggest gains are.
That's the perception, absolutely. But, what if the actual data tells a different story, maybe a more nuanced one?
Okay. Like revealing some, I don't know, hidden gems for profit where you might not expect.
Precisely. It's a classic case of maybe our intuition clashing a bit with the cold, hard numbers. We often focus on the biggest absolute value, right? But real investment success, well, it's not always just about the largest total profit figure.
Interesting. So today we're doing a deep dive into a specific strategy.
Yes, we're looking at what's known as gap investment.
Right. Gap investment. And for anyone maybe not familiar, that's basically buying a property, an apartment usually, that already has a Jinansi lease on it.
Exactly. So you have a tenant who's put down a very large refundable deposit to the Jinnahs.
And that deposit covers a huge chunk of the purchase price.
It does. It dramatically cuts down the initial cash you, the investor, need to find. It's really all about leverage.
Got it. So less of your own money tied up initially.
That's the idea. And our mission today really is to unpack where the real success stories were with this gap investment approach.
Okay, so going beyond just the headline number, the total price increase.
Exactly. We want to look at the actual return rate on that initial investment you made. We're digging into a recent analysis by Zigbang, the real estate brokerage.
Using their transaction data.
Yep, national apartment transaction data. And honestly, it does challenge some common assumptions.
All right, I'm intrigued. So let's start with the baseline, maybe the expected picture. When we just look at the sheer market price difference, the EVA, the raw increase in value, Seoul dominates, right?
Oh, absolutely, no question there. The Zigbang analysis confirms it loud and clear.
How dominant are we talking?
Well, think about investments made back in 2015. Over 10 years, Seoul apartments saw an average price difference, market price difference, of 625.85 million won.
Wow, okay. That's what, around $500,000 US?
Yeah.
Just in value increase?
Pretty much, yeah. And just to give you context, that's more than 3 times higher than Gyeonggi province next door. Gyeonggi was around 192 million won. Seoul was way out ahead in just raw gains.
And that wasn't just like a blip from a decade ago.
No, no. Even looking at more recent investments, say starting in 2020, over 5 years, Seoul still led the country. Average market price difference was 191.29 million won.
Okay, and I guess within Seoul, the usual suspects led the pack.
You guessed it. The so-called Gangnam Big Three, Gangnam-gu, Yongsan-gu, and Sucho-gu, they were right at the top for that 10-year market price difference.
Oh, how did they go?
Gangnam-gu alone hit an average of 2.07 billion won.
2 billion won. That's
Yeah.
that's huge, like 1.5 million US dollars.
Roughly, yes. So, yeah, if your only metric is the absolute one increase in value, Seoul, and especially Gangnam, is clearly the champion, no doubt.
But I sense a but coming. This is where the story shifts, right? When we look at the return rate.
This is exactly where it gets fascinating. This is the aha moment. While Seoul crushed it on total price difference, the gap investment return rate, which crucially compares the profit to your actual initial cash investment, well, it paints a very different picture. Quite surprising, actually.
Okay, so factoring in how little cash you might have needed up front changes things. What did those return rates look like over 10 years? Did Seoul still lead there?
Well, for the 10-year average return rate, Seoul did still lead. Yeah, a really impressive 439% return on that initial investment.
439%. Okay, still massive.
Absolutely. Followed by Gyeonggi at 235% and Daejeon down south at 196%. Still very strong numbers across the board for that longer time frame.
Okay, so Seoul's still ahead on the 10-year rate, which kind of makes sense given how much prices just ballooned there. But you mentioned recent investments. What about the 5-year average return rates? I feel like this is where the surprise is. You are right on the money. This is where the leaderboard gets totally flipped on its head. For the recent 5-year average return rates, get this. Gangwon-do topped Seoul.
Gangwon-do, up northeast.
Yep, yeah. Gangwon-do showed a 116% average return rate. And right behind it was Cheongshan-bikdo, or Cheongbuk, at 115%.
Wow. Ahead of Seoul.
Ahead of Seoul for that 5-year return rate measure. It's a pretty stark departure from that traditional Seoul is everything narrative.
That really is
Yeah.
counter to it. So why? What's the explanation? Their actual prices didn't go up nearly as much as Seoul's, did they?
No, not in absolute one terms, but this gets to the core mechanic of gap investing. The Zigbang CEO, Lee Jae-yoon, he explained it well. He said basically This means that the price increase of low-priced apartments in some provincial areas in recent years has surpassed Seoul's increase rate.
Okay, the rate of increase may be starting from a lower base.
Yeah.
Exactly, but think about why that translates to such a high return on your investment. Let's say you use gap investing. In a provincial area, maybe the Junsee's deposit covers, say, 80 or 90% of a much lower purchase price.
Right, so your actual cash input is tiny.
Tiny. So even if the apartment price only goes up by, say, 30 million won, which is peanuts compared to Seoul's gains, that 30 million won profit on maybe just 20 million won of your own cash?
That's 150% return.
Exactly. Whereas in Seoul, maybe you made 100 million won profit, but your initial investment, even with Junsee's, might have been 200 million won because the overall price was so high. That's only a 50% return.
I see. So the lower entry price and potentially higher Junsei ratio in the provinces magnify the percentage return on your small initial stake.
Precisely. It's the power of leverage on a smaller base. It's not just about how much the value increased, but how little of your money it took to capture that gain.
That's a really critical distinction.
Yeah.
And it wasn't just happening way out in the provinces, right? You mentioned surprises even within the capital region itself.
Yeah, this is also fascinating. Even close to Seoul, the winners for return rate weren't necessarily the ones with the biggest absolute gains.
So not the Gangnam Big Three.
Correct. While Gangnam-gu, Yeongsan-gu, Sucho-gu had the biggest market price difference, the highest 10-year gap investment return rates within the broader capital area were actually found elsewhere.
Wow.
Seoul's Sandong-gu came out on top with an incredible 686% return rate.
Sandong-gu, okay.
And just behind it was Gwacheonsi in Gyeonggi-do at 659%.
Wow, so even higher percentages in this Seoul average we mentioned earlier.
Significantly higher, which suggests these areas may be less flashy than Gangnam. We're actually much more efficient places to deploy capital using this specific strategy.
So why did Sangdong-gu and Gwacheon outperform on efficiency? What did Zigbang find?
Well, the analysis basically pointed to the same factor. Lower initial investment costs compared to those giants like Gangnam.
Ah, okay. So the purchase prices, while still high compared to the provinces, were maybe lower relative to the Jaeminders levels they could command.
That seems to be the key. A better chance ratio, meaning you needed less of your own cash up front compared to buying in the absolute most expensive districts. So again, even a slightly smaller absolute gain could translate into a much, much better percentage return on your actual invested capital. It's about investment efficiency.
It really shows how dynamic the market is, doesn't it?
Yeah.
It's not like one place is always the best bet no matter what.
Absolutely not. The Zigbang CEO, Lee Jae-yoon, he highlighted this too. He said something like, this analysis clearly shows the dynamism of the market, where the best return on investment changes completely depending on the timing of the investment.
And the strategy used.
And the strategy. And for gap investment, he stressed that critical factor. Success or failure, he said, is determined by the Junsei ratio.
The Dae-Yansi ratio. That's the key takeaway then for this specific approach.
It really is the linchpin. That ratio, the size of the Jenny's deposit relative to the total sale price, that's what dictates how much leverage you get, how little initial cash you need.
Mm-hmm.
If that ratio is high, your potential percentage return just skyrockets, even with relatively moderate price appreciation. It's all about maximizing profit with minimal upfront capital efficiency, basically.
Okay, so wrapping this up then, the big picture here seems to be that, real investment success, at least through this gap investment lens, isn't just about chasing the biggest headline numbers or the most famous postcodes.
Not at all. It's much more about efficiency, about the return you generate on your actual capital committed.
And sometimes that efficiency, that success, is found in places you might not immediately think of, places outside the usual spotlight.
Exactly. It encourages looking beyond the obvious, doesn't it?
It really does. And, that brings up a final thought, maybe something for you, our listener, to chew on. If looking past the obvious real estate hotspots reveals such different truths about where the best returns are found, what could that tell us about finding value elsewhere?
Interesting question. Like in other parts of life or other investments.
Yeah. Could it apply to, say, learning a new skill? Is it always best to go for the most popular, crowded field? Or is there more value in finding a niche where maybe your initial effort, your investment, yields surprisingly high returns because fewer people are focused there.
Or in your career, perhaps. Focusing on areas where your specific contribution might have an outsized impact relative to the cost or effort involved.
Exactly. It's kind of a reminder, isn't it?
Yeah.
To maybe look beyond just the big absolute figures, the conventional wisdom.
And focus more on those underlying ratios, on efficiency, on the return you get for what you put in.
Definitely something to ponder.